Welcome to our channel. If you're considering a home equity loan or line of credit, follow these step-by-step instructions to use home equity wisely. Step 1. Understand the difference between HELOCs and home equity loans. Home equity lines of credit are revolving credit lines with variable rates, while home equity loans provide lump sums with fixed rates. Step 2. Calculate how much equity you have in your home. Subtract your mortgage balance from your home's current value to determine available equity. Step 3. Know that lenders typically allow borrowing up to 85% of your home's value minus mortgage balance. With a $400,000 home and $200,000 mortgage, you might access $140,000 in equity. Step 4. Use home equity only for value-adding purposes like home improvements, education, or debt consolidation. Never use it for vacations, depreciating assets, or lifestyle expenses. Step 5. Compare offers from multiple lenders, including your mortgage holder. Shop for the best interest rates, fees, and terms before committing to a home equity product. Step 6. Understand that your home is collateral for the loan. Defaulting on home equity loans can result in foreclosure. Soonly borrow what you can comfortably repay. Step 7. Consider tax implications of home equity borrowing. Interest may be tax deductible if used for home improvements, but consult a tax professional for specific guidance. Step 8. Create a repayment plan before borrowing, especially for HELOCs. Don't treat revolving credit as free money. Have a strategy to pay down the balance systematically. Don't forget to like this video and subscribe to our channel.